everyone. I'm Maggie Parkhurst from Global Upside. Welcome to today's virtual open house. Our panelists will begin by addressing the top HR and payroll considerations in Latin America and conclude with a question and answer session. Please enter your questions via the chat window located at the bottom of your screen at any time. We'll answer these questions in the order they are received. If we are not able to answer all questions during our live session, we will respond to you individually via email. First up, I'd like to introduce Andrew Wilson. Andrew helps some of the world's leading companies tackle complex global HR and payroll challenges. Prior to Global Upside, Andrew worked at PricewaterhouseCoopers, Oracle, and also consulted for companies like Nestle, P&G, and Pepsi Cola. Also on our panel is Nathan North, Director of Global Payroll. Nathan helps our clients develop robust payroll processes, systems, policies, and programs. Prior to Global Upside, Nathan managed global payroll for leading employers, including Netflix. Now over to you, Andrew.
Thank you, Maggie, and good morning, everyone. In terms of the key considerations moving into Latin America, which from our perspective includes Central and South America, certainly it is a totally different environment, and obviously the labor laws and the statutory requirements are much more onerous as it relates to Latin America. A lot of companies do start off with independent contractors, and the provisions are very strict down in Latin America as it relates to the definition of what an independent contractor is and the amount of time they are allowed to work for you. But obviously also the contractors down there do like to take advantage of the tax advantages of being an independent contractor. But from a compliance perspective, obviously it is something that needs to be addressed. Certainly in terms of a professional employment organization, PEOs or employer records that have their own legal entities in the country and can employ personnel on your behalf, enter into the employment agreement, and make sure that you are in compliance from a payroll tax and statutory benefits, it is a good option. It is typically used for companies when they're looking at short-term assignments down in Latin America. And really, it is the only other alternative in terms of really making sure you're in compliance, other than establishing your own legal entity and really doing a direct hire situation where you undertake the burden of the employment agreement with the employee and undertake the requirements in terms of the payroll taxes, statutory benefits, as well as the supplemental benefits. Again, in terms of South America, there's no such thing as an at-will employment. Actually, most of the countries, the government labor laws do dictate exactly what the employees are entitled to, and most countries do recommend using an employment contract to define it, be it fixed term, or be it full-time, or be it temporary. So there are a lot of different requirements down in South America. And again, the benefits are typically defined by being statutory or supplemental and customary. South America does have interesting concepts in terms of benefits, both from a perspective that a lot of the countries do offer meal vouchers, and they do offer childcare vouchers and things of that nature, because it is very much a family-orientated type continent. And there are other things such as customary benefits, such as private medical insurance, life insurance, enhanced pension and savings plans to consider. Payroll, in most countries, it is monthly. Some of the Central American countries are semi-monthly or every 2 weeks. It is normal in terms of the taxes and benefits, or they do have the concept in a lot of the countries of the 13-month and the 14-month, and most of the reporting is on a monthly basis requirement. In terms of the support services, obviously it is very much a country where a continent where most of the benefits are skewed towards really being employee advantage. So there is a lot of requirements in terms of reporting, government reporting, as well as a lot of the specifics in terms of statutory leaves and requirements in terms of what the employees are entitled to. So that's a preliminary overview. Next slide. So the specific countries we are talking to today are, from our perspective, three of the most popular to enter into in terms of Mexico, Brazil, and Colombia. And certainly most of the clients we work with are entering into these countries. Topical subjects in terms of these particular countries right now: in Mexico, obviously NAFTA is high on the list. And specifically, a lot of the influence of the U.S. labor unions are trying to make an impact in terms of insisting that the Mexican wages are raised to be more competitive with the U.S. wages. So that is a big topic down there right now in terms of the renegotiations that are going on. They do have the concept of permanent employment is established after 1 month of actually an employment. And so there are a lot of specific provisions in terms of entitlements to vacation, severance, and termination allowances in terms of hiring in Mexico. They do have very generous vacation and service day provisions, which will literally start after the first year and really accrue on an annual basis, the majority of which is in the first 3 years that basically you're being hired there. The other aspects to consider in terms of the time frames, in terms that do have the concept of a maximum work week, and in terms of the amount of hours that they're allowed to work. So there is a lot of specific aspects you have to address in terms of monitoring the number of hours that they're working at a specific time. And then Nathan, do you want to talk about private retirement and old age insurance fund?
Yes, Andrew. The private retirement and old age insurance fund is definitely an item that must be remembered by most payroll providers and make sure, because not generally a part of the complete social tax section. So this applies to employees who did not opt in to retirement to the pension country pension plan, or did not, or were employed prior to July 1st of 1997. The other element to remember in LATAM in general and Mexico is a 13th month payroll. However, in Mexico it is different, that it's 15 days of regular wages paid out in December. Back to you, Andrew.
And moving on to Brazil, obviously there was a dramatic change in terms of the labor laws in 2017, which introduced a lot of specific changes as it relates to employment and really liberalized a lot of elements of the labor laws down there, which are quite onerous. Now, joining a union is now optional. However, you are still obligated to pay the union dues, but you do not have to be a member of a union if you work in a specific industry. Also, they do allow the concept of voluntary resignation, which obviously we take for granted here in the States, but they have now have specific provisions on how you can enter into such a voluntary resignation with your employer, and if there's agreement on both parties, you're allowed to take it. They have also changed the definition of what is a part-time worker, which is now up to 30 hours a week, or for people working overtime, I believe it's 26 hours with an additional 6 hours. So they are a little bit more liberal in terms of what the definition of what a part-time worker is. But they are also trying to encourage companies to be more compliant with the labor laws of the country by having they're talking about a proposed national database where they will require that all of the working arrangements and employment agreements of the employees are deposited so that they can review them and make sure that companies are in compliance with the requirements in terms of their working arrangements. And then do you want to talk about the payroll perspective, Nathan?
Yes, Andrew, thank you. One thing to remember is your payroll accruals for the 13th month and 1 month vacation. If you're not dividing the annual salary of your employees by 13 and you're using the calendar year of 12, then you should be accruing the 13th month, and then also remember to always accrue the 1 month vacation that employees are qualified to receive after 1 month of, after 1 year of employment. Back to you, Andrew.
And then moving on to Colombia, they have introduced enhanced severance payments. So again, it's defined by the labor laws, and they have enriched it in terms of what you are mandated to pay the employees, really dependent on service years with the company. There has been an increase in minimum wage, as well as other allowances that they are targeting to basically help the employees in that country with the cost of living. There's been a sweeping tax reform, which has affected the tax rates of the employees, but also has introduced the concept of capital gains. So that has been brought into the country. And again, they have a restriction on the amount of time that the employee is allowed to work in a work week, which is defined by law in terms of the quality of life and what they're expected to do. And then, Lathan, do you want to talk about the updated tax tables?
Yeah, thank you, Andrew. In regards to what Andrew has already mentioned about tax reform, also the tax tables for both the tax value units and peso equivalents have been updated and are scheduled to be updated in 2019. So I would keep your eye out on that. Also validate that your 2018 tax tables are updated. Back to you, Andrew.
Great.
Okay. Go ahead, Maggie.
Thank you, panelists. We have a few questions that came in that we'd like to answer. The first one is, I'm looking for general knowledge around HR practices in Brazil, including compensation, incentive pay, benefits, and recruiting.
So I think in terms of, as we discussed about the employment agreements and the compensation, I think that obviously, particularly in Brazil, they do encourage you to define everything in an employment agreement as it relates to compensation, holidays, vacations, statutory leave entitlement, and customary and statutory benefits. The recruitment process in Brazil is quite onerous because they do want to make sure, because of the once you do hire them, there is almost an immediate entitlement in terms of that worker. So, but we have had good success with staffing agencies, and obviously there is certainly a lot of hiring in terms of the main commerce centers, and then they do have the concept of the 13th month there in terms of the bonuses, in terms of a bonus month around Christmas time. And then there is the concepts of variable pay, but you do want to make sure that you address them when you're in the employment agreement.
Okay, great. Thank you. The next question is about MBO bonus in Brazil.
So in regards to the MBO bonus in Brazil, we do not recommend having an MBO bonus program. And this is as a result of not only the employment law requirements in Brazil, but also the specific CBA requirements from the unions. These items are laid out based upon the type of company
service for Brazil.
And I think that goes back to sort of, as we discussed about the definition of what is a part-time worker in Brazil, which is up to the 30 hours. And I think that if you are talking about that you have an independent contractor that is full-time down there, then obviously you're not in compliance and you're not really obeying what the labor law requirements are. However, if you have no legal presence and do not intend to establish a legal presence, or you're not doing business with companies in Brazil, then obviously the burden falls on the independent contractor from a tax and compliance perspective. However, if you have customers or you do intend to do business in Brazil, then obviously the recommendation would be to incorporate the legal entity and hire the independent contractor directly if they are full-time.
Great, thank you. The next question is impacts to the United States and expats from the United States.
Thank you, Maggie. I'll take this question. In regards to impacts to the U.S. and expats from the USA, this is a very general question, but I would use Brazil as an example, is that number one, there is no tax treaty between Brazil and the U.S. This also includes totalization agreements. So the expats or impacts can become very complex projects. And I would definitely recommend having an expert on your team or a part of your team to address these items.
Great, thank you. What is the termination process and calculations in Chile, Argentina, Colombia, Peru, Brazil, and Mexico?
Of course, the short answer is it's widely different country to country. Certain countries like Brazil, you actually do have to get approval from the government agency before you can go through the termination process, depending on what number of employees are. But a lot of the termination provisions are addressed in the employment contracts. There are specific requirements in terms of notice periods that you have to give the employees in terms of the notification to them about the intent to terminate. There is a question of, is it with cause or not, whether it's a voluntary resignation, but certainly it varies in terms of the individual employee as opposed to a workforce reduction when there's a number of employees involved. But in all cases, I think that, particularly in Latin America, you should have legal counsel as well as human resources involved because there are specific requirements in each country, and there are labor tribunals, and there is a lot of, obviously, collective bargaining agreements that govern specific industries. So it is very complicated and really does require legal counsel.
Great, thank you. The next question is, how do I recruit for positions in Mexico?
Again, I think that a lot of it is really finding local resources, staffing agencies, as well as particular expertise by those agencies in terms of identifying the skill sets. But there is obviously, because of the penetration of the U.S. companies into Mexico in terms of a lot of the industries, and obviously there's a lot of maquiladoras and networks, particularly in northern Mexico as it relates to supporting U.S. industry. There is a lot of specialists who do recruit specifics for particular industries, and they are very adept. So based on job descriptions and what you're looking for at finding what you need.
Great, thank you. What is the 13th month requirement in Brazil?
Maggie, I'll go ahead and take this question. The 13th month requirement in Brazil is a statutory requirement. The standard procedure is to pay half of the 13th month in November and the other half in December. However, one landmine to keep in mind is that CBAs are now having an influence on the payout, and also if there's any available flexibilities to afford it to the employees throughout the year when it comes to the 13th month requirement in Brazil.
Great, thank you. The next question is, what unique items are there to consider they're thinking about setting up an operation in Colombia?
And I think in terms of Colombia, obviously, as we discussed, and really a lot of Latin America, really your only option is to incorporate a legal entity, register appropriately for the income taxes, indirect taxes, and payroll taxes and statutory benefits, and open up the bank. Put yourself in a position to hire directly using a labor statutory requirements, but really understand, your industry, and also look at the supplemental customary benefits it's going to take to attract the right employees, as well as obviously, what types of compensation, fixed and variable, you should be using.
Okay, thank you. What are collective labor agreements?
So Maggie, the collective labor agreements are different than CBAs or collective bargaining agreements. The collective labor agreements refer more to working hours and is actually an agreement between the company and the employees as a whole, similar to what you would find in MEA in regards to some of the agreements between the employees through the work councils.
Thank you. Can you elaborate on profit sharing rules in Mexico?
Thank you, Maggie. The profit sharing rules in Mexico are very specific and only apply to certain employees. It is a constitutional right to the employees for companies that have an annual income of at least 300,000 pesos. And it covers most plant workers, workers hired on a fixed term at least 60 days of the year. And then also there can be situations where even former employees are eligible to receive profit sharing in Mexico.
Great, thank you. I think we have just one last question here. For Colombia, can you provide more specifics about when you would be able to use a PEO rather than creating a legal entity?
Again, I think in terms of Colombia, your options are obviously you could use either. The PEO obviously has a legal entity down there already. They are, they have registered for the payroll taxes and statutory benefits. They have their own employment contract, so they can employ the person on your behalf, and certainly the person would act at your direction. And it actually does provide some benefits in terms of sales situations. If they are a salesperson, they can act more overtly in terms of representing the company. But it is, as we discussed, if your intention is to be there, for a longer period than 12 months in terms of doing business down there, then probably the concept of the legal entity is better, because longer term it was going to be cheaper, and it is going to give you more representation from a legal perspective to actually be established in the country and to be able to represent yourself.
Okay, thank you. Thank you everyone for attending. We had a few more questions in the queue that we'll respond to individually via email. You can also reach out to our panelists individually. Their emails are shown on your screen. And we will also be offering more webinars, so stay tuned for that. Thank you.
Thank you very much. Have a great weekend, Susan.